Welcome to the Daily Business and Finance Show. Unpacking the Federal Reserve stance, rates remain unchanged with no cuts in sight. New York Community Bancorp faces stock plunge following dividend cut and Q1 losses. We delve into the winners and losers of Republican policies across sectors, as per Goldman Sachs. Fed Chief Powell rules out March rate cut. Discover hidden income opportunities in the S&P 500 beyond Mag 7, according to analysts. Wall Street applauds Byron Allen's Paramount bid as potential lifeline, while SoFi stocks take a hit after Morgan Stanley downgrade to underperform. Stay tuned after this short ad break for an insightful discussion on these headlines and more. The Federal Reserve continues to hold its policy interest rate steady at between 5.25 and 5.5% for the fourth meeting in a row, due to ongoing worries about inflation. Even though it has removed its bias towards tightening, the Fed does not intend to make immediate cuts to the rate until there is assurance that inflation is on a sustainable path towards 2%. This decision resulted in a decrease in equity markets, with Nasdaq dropping by 1.5%, S&P 500 by 1%, and Dow Jones by 0.2%.
Shares in New York Community Bancorp experienced a significant drop of 17% due to less than satisfactory fourth-quarter results and a loss per share. The bank is preparing for more rigorous capital requirements following its acquisition of both Flagstar Bank and Signature Bank, which has increased its assets to over $100 billion. Additionally, the bank reduced its dividend from 17 cents to 5 cents per share and allocated an impressive $552 million towards potential loan losses.
Analysts from Goldman Sachs have made predictions about the sectors and stocks that may flourish if a Republican candidate wins the presidential election. The sectors they've highlighted include financials, the steel industry, domestic security, onshoring enablers, onshore production and manufacturing, border construction companies, firms with small business exposure, and the energy sector. They anticipate that certain companies will outperform within these sectors. These companies are Jefferies Financial Group in financials, Vail SA in steel industry, Axon Enterprise in domestic security, and ExxonMobil in energy.
With the approach of the 2024 presidential election, analysts from Goldman Sachs anticipate that certain sectors might not perform as well if the Republicans secure a victory. These sectors encompass companies like Best Buy and Marriott International, which are grappling with wage pressure. Consumer discretionary firms such as YETI Holdings and Under Armour that face tariff risks are also included. Industrial machinery companies like Ingersoll Rand could be affected too. The list extends to technology firms such as Qorvo and Skyworks Solutions. Electric vehicle manufacturers, including Tesla and Ford Motor Company, may also see an impact. Clean electricity producers like Waste Management and NextEra Energy Partners could potentially be affected. Other sectors include defense contractors such as Science Applications International and CACI International, battery storage businesses exemplified by Fluence Energy, carbon credit beneficiaries like Weyerhaeuser Company, green hydrogen industries including CF Industries Holdings, along with energy-efficient companies represented by Carrier Global Corporation.
Jerome Powell, the chair of the Federal Reserve, has declared that even though inflation is lessening, it still surpasses the Fed's target of 2%. He indicated that while there are no intentions to reduce rates in March, it might be required later this year. This announcement resulted in a decrease in equity indexes. Additionally, the Fed intends to deliberate on decelerating balance sheet runoff during their forthcoming meeting.
Savita Subramanian, who is the head of U.S. equity and quantitative strategy at Bank of America Securities, anticipates a possible transition from money markets to equity income if yields decrease. She points out 85 S&P 500 stocks that have potential for high dividend yields in the coming 3 years. Her recommendation includes overweighting sectors such as financials, real estate, consumer discretionary, and energy. Despite the steep prices of tech giants, she maintains that the S&P 500 has room to grow without their influence. She acknowledges a structurally tight labor market but does not predict significant layoffs that could cause worry.
Wall Street is encouraging Paramount to accept a $30 billion offer from media tycoon Byron Allen. This proposal represents a 50% premium on its current share value. The deal encompasses a bid of $28.58 per voting share and $21.53 for each non-voting share. Despite the appealing nature of this offer, Sherry Redstone, who holds controlling interest in Paramount, may pose an obstacle to the deal's completion due to her past tendency to value the company above market offers.
SoFi Technologies shares experienced a 3.1% drop in pre-market trading as a result of a downgrade from Morgan Stanley. This downgrade was attributed to excessive optimism regarding the company's profitability plan. Even though there has been a 20% increase since the bank's $2 billion forward flow agreement, Morgan Stanley cautions about an overly positive trajectory towards profitability in 2026 due to potential issues with top-line growth in 2024.
And that's a wrap on the Daily Business and Finance Show. Keep investing in knowledge, stay savvy, and remember the best investment is in yourself. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. It's time for us to say goodbye until we see each other again tomorrow. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.